Yeah, welcome guys. I want us to do management accounting. And here we are looking at budget. Budget. And this budget we are doing, it is suitable for anyone who is doing management accounting, be it CPA, be it ATD, level 3, or any other course that entail management. And we are going to do illustration on KASNEB ATD level 3 pilot paper, ATD level 3 pilot paper, December 2021, question number 3. Let me share the question. Although I know majority of you are having this paper, but let me share the question with you briefly. Briefly. Here it is. I hope you can see the question. Ndio hii. Swali tuko nayo. Haya. Perfect. We have the question. It is pilot paper, ATD level 3. Question number 3. And remember, we are talking of December 2021. You can see the question there. And the question read, question A is a theory. Inauliza, describe the features of a budget. Remember, first of all, budget is a forecast. Budget is an estimation of the time to come, you see. And this budget have got various features. For example, one of the feature of a good budget is that it should be well planned. Budget should be well planned. We should have a valid plan for the budget. Number 2, it should be flexible. Should be flexible. Yes. We should be able to change our budget according to the circumstance and the nature. The other one, number 3, it should be realistic. You see, some people may tend to set a budget that is very unrealistic. That is not attainable. So a good budget should be realistic. Yes. The other one, it should be motivating. This budget should be motivating. It should facilitate achievement of goals. Yes, should be motivating. Another one, it should have a time frame. A good budget should have a time frame. Maybe in budget ya 1 month, 2 months, 3 months, 1 year. Yes, it should have a time frame. Let's go to part B of the question. And part B inasoma hivi. Omran produces 2 products. And the following estimate related to the financial year ending December 2022. We have products X and Y. We have the selling price per unit, direct material, direct labor, sales unit. We have finished products. At the beginning of the year, at the end of the year, then you have additional information. Number 1, tunaambiwa direct material cost per kg is shillings 12. Labor cost per hour is shillings 20. The stock of direct material at the beginning and closing of the year are expected to be 10,000 kg and 500 kg respectively. Required, Roman 1, the sales budget. Roman 2, production budget. Roman 3, labor cost budget. Number 4, material usage budget, and then the material purchase budget. All right. Having done that, now we can solve our question. Let's start with the sales budget. And remember, sales budget is a budget that indicates the level of sales that you want to make. You see? And therefore, tutaanzia na jina la hii kampuni ama huyu investor anaitwa Omran. So we say Omran Enterprise. We can talk of Omran Enterprise. Tunataka kutengeneza sales budget. Na anatuambia for the year, is it for the year ending? Yes. For the year ending December 2022. You see? So for the year ending December 2022. Just that. All right. Now, hapa tuko na unit mbili, remember. We have two products. So hapa naweza andika products. We want to sell X and Y. X and Y. So hapa tutaweka any information touching on sales. Sales budget itabeba information yenye inaongea kuhusu sales, meaning tutakuwa na sales units hizo hizi. Hapa nitaandika sales units. For product X, the sales units ni ngapi kulingana na swali hiyo tumeangalia? We have 38,000 units. For Y, we have 46. Good. Then we have the selling price. Selling price per unit. Unit moja tunaambiwa inauzwa pesa ngapi? For X, 240. Okay. And for Y, 350. Very true. And therefore, yes, we multiply so that we can get the budgeted revenue. The budgeted revenue. Budgeted revenue. Multiply 38,000 by 240. We have 9,120,000. 9,120,000. We come for Y, take 46,000 by 350. By 350. Yeah. Yes, take your time, multiply vizuri. Yes. $16,100,000. 16,100,000. And that is the sales budget. Inaonyesha the sales in units, the selling price per unit, and then the budgeted revenue. That is the sales budget. Then we have Roman 2. Roman 2 anataka tutengeneze the production budget. So hapa tutakuja tuseme already hapa tuko na heading Omran Enterprise. Remember this is a continuation. So hapa nitakuja niseme production budget. Production budget. And this production budget, we wanted to produce X and Y. Kwa hivyo hapa nitakuja niseme products. And here kwa product niseme we have X and Y. X and Y. In this production budget, kitu tunafaa kujiuliza ni tunataka kuuza how many units? because we produce what we want to sell. You cannot sell what you have not produced. And therefore, hapa kwa production budget, one of the elements is the sales unit. Kwa hivyo hapa nitakuja niseme the budgeted sales, the sales units. Tunataka kuuza how many units? For X, we want to sell 38,000. Kwa hivyo hapa nikuje niseme 38,000. For Y, we want to make a sale of 46,000. Kwa hivyo hizo lazima zikuwe produced ndio tuweze kuziuza. And then we add the closing inventory of finished good. Ati tunataka kubaki na how many units at the end of the year? You see? So hapa nitakuja niseme add closing inventory of finished goods. Finished goods ni vitu ambazo tumeproduce. You see? Tunataka kufunga na ngapi? The closing inventory. According to the question, you can see we have the finished product hapo kwa swali. At the end of the year, tunataka kubaki na 2,000 for X, true? 2,000 for X, and for Y, yes, for Y, tunataka kufunga na 1,500, then tuodoe the closing, kwa sababu, tuodoe the opening, because opening hauja ziproduce. So hapa tukuje to less opening inventory, na bado it is of finished goods. Opening inventory of finished goods. Yes. And here, the opening inventory of finished goods. How many units? Yes. 32 for X. And for Y, 1,000. Hizo tulifungua nazo. Kwa hivyo, hizo hatujaziproduce this time. So, teremka na hesabu yako. Take 38,000 plus 2,000 minus 3,200. Itakuwa 36,800. For Y? For Y, take 46. Yes, we'll be having 46,500. So those are the units to produce. Units to produce. Na hiyo ndio inaitwa production budget. Kwa hivyo huwa inachukua the sales units, the closing inventory of finished goods, then una less opening inventory of finished goods. Yes. Haya. Roman 3 of the question. Roman 3 of the question. Tunaambiwa to prepare the labor cost budget. Labor cost budget. And that is information to do with labor. So hapa nitakuja niseme Omran Enterprise ama limited yes, this is labor cost budget, then for the year added December 2022. Sinamna hiyo? All right. We want to work for X and Y. So hapa tunachukua information pahali umesikia labor imetajwa. And one of such information ni tumeambiwa kuna You see tuko na labor hours. We are being given the labor hours. So hapa nitakuja niseme labor hours. X require how many labor hour per unit? Unit moja ya X ina require 4 hours. Unit moja ya Y ina require 3 hours. Then what is the cost per hour? Cost per hour. For additional information number 2, umeambiwa the labor cost per hour is shillings 20. You see? It is shillings 20 for X, and for Y, bado ni shillings 20. So let's compute the cost per unit, the labor cost per unit. Labor cost per unit, you take 4 by 20, that is 80. 3 by 20, you get 60. That is the labor cost per unit. We can compute the total labor cost of producing all the units. You see? So we can compute total labor cost. Total labor cost, mtu anachukua the cost per unit. You multiply by the total unit you want to produce from okay, for X and for Y and for Y. Na hiyo information tutaitoa kwa production budget. Ndio maana umeambiwa uprepare production budget before labor budget, kwa sababu ile information tumepata kwa the production budget tutaitumia hapa. Haya, tumeona tuna produce how many units for X from our production budget. Yeah, we are producing 36,800 for X, meaning we multiply this by 8 now. And for Y, tuna produce how many units? 46,500. We multiply by 60. What is 36,800 by 80? Yeah, we are going to get 2,944,000. Add for Y. What is 46,500? We multiply by 60. All right, so let me up here. Niandike 2,790,000. That is the labor cost budget. Kama umeitishwa okay, cost per unit, ungefikisha hapa. Kama umeitishwa total labor cost, ndio hiyo. Okay, na tumesema total labor cost unachukua the units to produce from production budget. You multiply by the cost per unit. Okay, na cost per unit, it is the labor hour times the cost per hour. That is it. That is it. The other question, it is material usage budget. The material usage budget. Material usage budget. We have the information provided there. And for this material usage budget, we must know, okay, hapa kwanza tunaweka anything to do with the material. You see, tuko na direct material itatumika. Tuko na direct material cost itatumika. We have the stock of direct material itatumika. So hapa tunaweka information yenye inahusu nini? The material usage. And as you can see, tukianzia pale juu, product X. To make one product of X, it requires 5 kg of material X and 4 kg for material Y. So that is the starting point. All right. So kampuni inaitwa Omran. So here you can talk of Omran Enterprise. This is material usage budget. Material usage budget. Tumeambiwa for the year ending December 2022. So I have my X and Y. I have my X and Y. So ndio tuweze kujua the material to use, we must know the units to produce. You see? Hapa nitaanzia na units to produce from the production budget. So production budget is very essential. Tumeona tunataka kuproduce how many units for X? 36,800. And for Y, 46,500. Now, we have material required per unit. 1 unit of X require how many units? How many kg? Yes, it require 5 kg. 1 unit of Y require 4 kg. So tunaweza jiuliza basi, how many kg do we need for X and for Y? So material required here. Material required for X, take this times this. 184,000. Take this by this. We have 186,000. Hapo ni sawa. Hapo, that is the material required in kg. Okay? Then hapa, we can have the total column. Meaning ngependa uniadie hii plus hii, we get this. The total material we need. The total. 300. We need 370,000 kgs. True? Now from there, tulikuwa na material tulikuwa tumepewa the closing stock of raw material. We have it. Sio? Si tuko nayo? Yes, we have it. So hapa tutakuja tuseme add. Na tuna add the closing. So a point of correction, we are saying here we are preparing the material usage. We want to know the quantity of material we used. And therefore, closing material haijatumika, ndio maana iko closing. You see? So we cannot add it. We are going to add the opening stock of raw material. And the opening stock of raw material kulingana na swali, kwa additional information, tuko nayo, note number 3. At the beginning tulikuwa na 10,000. At the beginning tulikuwa na 10,000. So hapa mwisho, najua hujaambiwa kama ni ya X ama ni ya Y. Hapa mwisho nitakuja niweke 10,000 kgs. Then I less closing inventory of raw material. Closing haijatumika ndio maana na iondoa. Na closing tumeambiwa ni ngapi? Ndio hiyo 500 kg. This one I'm deducting it. So take 370 plus 10,000, you minus 500. 3,500. That is the material used. We used the material of 379,500. Very good. Very good. So that is the material used. If we want to have the cost of this, the value of this material, the value of material used, we take the cost of this direct material, na kwa additional information tumeambiwa hivi that the cost of direct material, it is 12 shillings per kg, you see. So we can just take 12 shillings, we multiply by 37,9,500, we get the total value of this material used. Do that. 4,554,000. That is it. That is the material usage. So we get material required, we add the opening raw material, we less the closing inventory of raw material. Kitu mtu anafaa kujua ni ati when it come to material, utaongea kuhusu the raw materials. Yes. Lakini kwa production, we consider the finished goods. Juu ni vitu usha produce. Ni vitu usha produce. A minute.